Hello students, in present video I am going to explain about 8th problem from final accounts topic. I am taking this question from Telangana State Telugu Academy Inter First Year Accountancy Textbook. But this video is useful to all commerce students who want to know about final accounts topic. So previous videos links are available in the description box. This question is also available in the description box. Let us start the problem. Prepare final accounts from the following trial balance of Mamaji traders for the year ended 31st December 2018. So our assumption is we are an accountant of Mamaji traders firm, a sole proprietorship firm. The trial balance on 31st December 2018 is given in the question. Means current year is 1st January 2018 to 31st December 2018. Means 2018 is our current year. They are following calendar year because last date of the year is 31st December. In calendar year only, year starts from 1st January and ends with 31st December. No? On that day, trial balance is given in the question with some adjustments. We have to prepare final accounts for this. Final accounts contains three things: trading account, profit and loss account, and balance sheet. Trading account, profit and loss account. These two are accounts now. So these two accounts in one table we have to prepare. Balance sheet, separate table. Balance sheet is not an account. It is only a statement. So we prepare trading account and profit and loss account to know the gross profit or gross loss and net profit or net loss. By preparing trading account, we can know gross profit or gross loss. By preparing profit and loss account, we can know net profit or net loss. These two accounts are nominal accounts. So while preparing these accounts, nominal accounts rules we should follow. What is nominal account rule? Debit all expenses and losses, credit all incomes and gains. So debit side, expenses and losses we have to show in trading account and in P&L account. Credit side, incomes and gains we have to show in trading account and in P&L account. Then debit side, expenses are of two types: direct expenditure, indirect expenditure. Direct expenditure we have to show on debit side of trading account, and indirect expenses on debit side of profit and loss account. So what do you mean by direct expenditure? Expenses up to manufacturing process are known as direct expenses. Expenses which are incurred after manufacturing of goods are known as indirect expenses. P&L account debit side we have to show them. Similarly, direct incomes, trading account credit side, indirect incomes, P&L account credit side. No? Direct income means what? Main income. For any trading organization, main income is sale. So sales income, trading account credit side we should show. All other incomes are indirect incomes. For example, interest received, discount received, dividend received, commission received. All these incomes we have to show on credit side of profit and loss account. These two are accounts now. Therefore, debit, credit symbols we have to write. And this is a format. Particulars amount, particulars amount. First trading account we prepare. Then continuation is profit and loss account. In trial balance, debit column, he gives expenses, losses, assets, drawings. So expenses and losses we have to show on debit side of trading account and P&L account. Similarly, in trial balance credit column, he gives liabilities, incomes, gains, nothing but profits, provisions, reserves, funds. So only incomes and profits we have to take on credit side of trading account and profit and loss account. Final accounts contains three things: trading account, profit and loss account, and balance sheet. Trading account, profit and loss account. These two are accounts now. So these two accounts in one table we have to prepare. Balance sheet, separate table. Balance sheet is not an account. It is only a statement. So we prepare trading account and profit and loss account to know the gross profit or gross loss and net profit or net loss. By preparing trading account, we can know gross profit or gross loss. By preparing profit and loss account, we can know net profit or net loss. These two accounts are nominal accounts. So while preparing these accounts, nominal accounts rules we should follow. What is nominal account rule? Debit all expenses and losses, credit all incomes and gains. So debit side, expenses and losses we have to show in trading account and in P&L account. Credit side, incomes and gains we have to show in trading account and in P&L account. Then debit side, expenses are of two types: direct expenditure, indirect expenditure. Direct expenditure we have to show on debit side of trading account, and indirect expenses on debit side of profit and loss account. So what do you mean by direct expenditure? Expenses up to manufacturing process are known as direct expenses. Expenses which are incurred after manufacturing of goods are known as indirect expenses. P&L account debit side we have to show them. Similarly, direct incomes, trading account credit side, indirect incomes, P&L account credit side. No? Direct income means what? Main income. For any trading organization, main income is sale. So sales income, trading account credit side we should show. All other incomes are indirect incomes. For example, interest received, discount received, dividend received, commission received. All these incomes we have to show on credit side of profit and loss account. These two are accounts now. Therefore, debit, credit symbols we have to write. And this is a format. Particular amount, particular amount. First trading account we prepare. Then continuation is profit and loss account. In trial balance, debit column, he gives expenses, losses, assets, drawings. So expenses and losses we have to show on debit side of trading account and P&L account. Similarly, in trial balance credit column, he gives liabilities, incomes, gains, nothing but profits, provisions, reserves, funds. So only incomes and profits we have to take on credit side of trading account and profit and loss account. This is a heading for trading account and profit and loss account. Trading account, profit and loss account of Mamaji traders for the year ended 31st December 2018. First trading account we prepare. We have to start with opening stock now. In trial balance debit column, opening stock in brackets 1/1/2018. So 1st January 2018 stock is given in the trial balance. 1st January 2018 is starting date of the year. So on that day if any stock is given, meaning is it is opening stock. Opening stock amount 3,500. In trading account debit side we should show this. To opening stock 3,500 rupees. Next we have to write purchases. Debit column, purchases 12,000 rupees. Inner column or outer column? In present problem, returns are given. In credit column, returns 800 is given. No? Clearly is not giving that this is purchase return. But we should understand. Because in trial balance, debit column he gives a sales returns. Credit column he gives purchase returns. So in credit column he is giving returns 800. It is purchase return. As purchase returns are given in the question, purchases we have to write in inner column minus returns 800 rupees. Remaining amount in outer column 11,200 rupees. Next, other direct expenses. Debit column of trial balance, purchases, cash at bank, cash in hand, wages. Wages we pay to labor who work in factory. So factory related expenses are manufacturing related expenses, direct expenses, therefore trading account debit side. To wages, adjustment is given, therefore wages amount 3,000 rupees in inner column. Adjustment number 5, prepaid wages 500. So next year wage 500 also we paid in current year. Next year wage you have to show in next year, not in current year. Therefore, prepaid wages we have to subtract. Minus prepaid 500 rupees. Current year wage expenditure is 2,500. Next, returns. In debit column returns are given. These are sales returns no? Carriage inwards. Carriage, carriage inward, carriage on purchases. These three are same. Direct expenditure, trading account debit side. To carriage inwards, 700 rupees. Legal expenses, opening stock, investments, trademarks, bad debt, salary, carriage outward, printing and stationery, drawings, debtors, discount, insurance, billing. All other items are completed. Come to credit. Sales. Credit side we should show this. By sales. In inner column, because in debit column sales returns are given no 18,000 rupees minus returns. In debit column, returns amount 500 is given now. This is sales return. We have to subtract here. Remaining amount in outer column, 17,500. Only one income we have. Then directly come to adjustments. Only one adjustment we should take here. That is closing stock. Opening stock debit side we are writing now. So closing stock on credit side we have to write. By closing stock, 2,500 rupees. Everything we have taken. Finally, find out gross profit or gross loss. First, find out the totals of two amount columns. Credit amounts total 20,000, debit amounts total 17,900. Credit total is more. Difference is 2,100. This is gross profit. Because credit side we wrote incomes, debit side expenses. Income total is more than expenditure total. Therefore, answer is profit. Debit total is less. Debit side, you have to write this answer. 2,100 rupees. Further write down to gross profit. Put the totals. Highest total 20,000 rupees. Trading account is completed. In the same table, now we have to continue with profit and loss account. Profit and loss account. Debit column, purchases, cash at bank, cash in hand, wages, returns, carriage inward, legal expenses means court related expenditure. So there is no relationship between manufacturing process and legal expenditure. No, it is indirect expenditure. P&L account debit side. To legal expenses, 1,200 rupees. Opening stock, investments, trademarks, bad debts. In trial balance, debit column, bad debts are given. Observe credit column, bad debt reserve is not given. Come to adjustments. Adjustment number 4. Bad debts 500 and provision for bad and doubtful debt 5%. In trial balance, bad debt is given. In adjustment, bad debt is given. And in adjustment, provision for bad debt is also given. So bad debt means from debtors money is not going to come. Loss. So two losses are there. In trial balance there is one bad debt amount. In adjustment also there is one bad debt amount. These two losses we have to add and we have to show on debit side of P&L account. Because losses no. 2. Bad debt. First trial balance amount you have to show in inner column. To that, in adjustments again bad debts are given no. Add. What to write? Additional bad debt. Bad debts 500. Additional bad debt is 500. Total in outer column. Next come to provision for bad debt 5%. So provision for bad debt means expected loss. 5% may come, may not come from debtors. So expected losses also we have to show on debit side of P&L account. 2. Provision for bad debt. Amount is not given, percentage is given 5%. We have to calculate this percentage on debtors. So see the debit column of trial balance, debtor value 12,500. First you take that amount, debtors 12,500. Now the important point is that a PBD 5% directly we should not calculate on this value because bad debt 500 is given in the adjustment now. So 1,000 rupee bad debt is given in the trial balance. Trial balance amounts means what? While preparing accounts, already these amounts we consider. Means while preparing debtors account, already this 1,000 was deducted. So remaining debtor value is 12,500. And this 500 bad debt is given in the adjustment. Adjustment amount means while preparing debtor account, it is not yet considered. So now we have to deduct that. Therefore, first this bad debts we have to deduct. Which amount? Only adjustment amount. Why? Because adjustment amount 500 not yet deducted from debtors. That is why first you have to deduct. Then 12,000 is the actual debtor value. Gross debtor value is 12,500. Net debtor value is 12,000 rupees. Final debtor value is 12,000. On this final debtors amount only we should calculate PBT. 12,000 rupees into provision for bad debt 5%, no? 5 by 100. 600 rupees. This calculation you have to put in brackets. Next, come to trial balance debit column. Bad debts completed. Next, salaries. Indirect expenditure. Profit and loss account debit side. No adjustment. Therefore, amount in outer column 2,300 rupees. Carriage outward. Carriage inward. Trading account debit side because direct expenditure. Carriage outward. Nothing but carriage on sale. This is indirect expenditure. P&L account debit side. 700 rupees. Printing and stationery. Indirect expenditure. Because there is no relationship between printing and stationery expenditure and manufacturing process. Printing. We spend expenditure on printing. So printing of bill books, invoices, vouchers, etc. And stationery. As we are maintaining accounts, we purchase some stationery items. Books, pens. So expenditure towards this printing and stationery is indirect expenditure. P&L account debit side. To printing and stationery. 800 is in inner column because adjustment is given. Second adjustment, outstanding stationery 600. We have to pay 600 plus outstanding 600 rupees. Total amount in outer column 1400 rupees. Drawings, debtors, discount. In debit column discount is given. Means this is discount allowed. Debit side. To discount 750 rupees. Insurance. To insurance company we paid insurance premium. Indirect expenditure. P&L account debit side. No adjustment. Therefore amount 1400 in outer column. Buildings. Asset not here. Debit column completed. Come to credit column. First we have to bring gross profit now from trading account. By gross profit 2,100 rupees. See the credit column of trial balance. Capital, return, sales, dividend 500. This is sole proprietorship business now. So they purchased a public limited company shares and they received dividend from that company. So credit side. By dividend 500 rupees. Discount. In credit column discount is given. Means discount received. Gain 800 rupees. Outstanding rent creditors. Trial balance completed. Come to adjustments. Adjustment amounts 2 times we should take. First one, closing stock. In trading account credit side we have taken. Second time it goes in balance sheet, not in P&L account. Ignore. Outstanding stationery. First time completed here. Second time in balance sheet. Depreciation on buildings. So buildings, when we use building value decreases, that is depreciation, loss. In P&L account debit side we have to show. To depreciation on buildings. Building value is given in the trial balance 6,000 rupees. On that depreciation percentage 10. 10 by 100. 600 rupees in outer column. Fourth adjustment, bad debts 500 and provision for bad and doubtful debts 5% completed. Fifth, prepaid wages completed. Sixth, interest on drawing 6%. This is a new point. In fifth problem, I explained about interest on capital. So fifth problem video link is available in the description box. Just like interest on capital, sometimes owner may decide to provide interest on drawings also. See the question. Drawings amount is 2,000 rupees. Drawings means what? From the firm, owner withdrew 2,000 rupees for his personal use, for domestic use. In accounts, we follow business entity concept. That concept says that while maintaining accounts, show a discrimination between owner's personal transactions and a firm's transactions. So don't club these two. According to that, when owner brings capital into the firm, we assume that firm is taking loan from outsider. When owner takes drawings from us, we assume that we are giving loan to one outsider. So when we give loan to outsider, then we receive interest on that. Therefore, interest on drawings, owner should pay to the firm. In firm books, we are preparing accounts now. Think from firm's point of view. To the firm, interest on drawings amount is coming, means income. So P&L account credit side we have to show. By interest on drawings, drawings amount 2000 into 6%, 120 rupees. So what is the reason behind providing interest on drawings? To discourage drawings by the owner. If this 2000 is not withdrawn by the owner, if this 2000 is invested somewhere, on that firm would have received 120 rupees interest. Owner should know about this. That is why sometimes firm provides interest on drawings. All amounts were taken in profit and loss account. Finally, observe which side total is more. Debit column total is more than credit column total. In rough notes, find out the totals of two sides. Debit column amounts total is 10,450. Credit column amounts total 3,520. First time, debit column total is more than credit column total. Recollect previous problems. Credit column total used to be more than debit column total. Net profit used to come. But here first time net loss is coming. Because debit side we write expenses, losses. Credit side incomes and gains. Expenditure total is more than income total. Therefore, the difference is known as net loss. Where we should write this answer? Where the total is less. Credit side total is less. So, credit side you have to show this by net loss 6,930. Now, two sides put the total. Highest total. Debit total is more than credit total now. So, debit total you have to write on two sides. 10,450. So trading account, profit and loss account, both are completed. Next, balance sheet. This is balance sheet format. Liabilities amount, assets amount. Trading account, profit and loss account. These two are accounts. Therefore, DR symbol, CR symbol we have to write. But balance sheet is only a statement. It is not an account. Therefore, don't write DR, CR symbols. Format is liabilities amount, assets amount. So liability side, when you are writing liabilities, you should not start with the TO2 because it is not an account. Similarly, asset side, don't start with BY by. In trial balance, debit column, he gives assets, expenses, losses, drawings. No? So from these amounts, only assets we have to take in balance sheet under asset side. Similarly, trial balance in credit column, liabilities, incomes, gains, provisions, funds, reserves will be given. So only liabilities we have to take here. Balance sheet heading. Balance sheet of Mamaji Traders as on 31st December 2018. Liabilities amount, assets amount. First debit column means here assets. Purchases. Cash at bank 2,000 rupees. Bank balance is asset now. Asset side. Cash at bank 2,000 rupees. Cash in hand means cash balance in the firm. It is also an asset. Asset side 1,000 rupees. Wages, returns, carriage, inward, legal expenses, opening stock, investments. Owner invested some amount in outside business. Investment means don't think that capital. If owner invests money in his firm, that is known as capital, liability. But if owner invests money in outside business, that is known as investment, asset. Asset side Investments amount 7,500 rupees. Trademarks. While representing about firm's name or firm's goods or firm's services, every firm uses one logo. So that logo contains words, symbols, letters, or combination of all these things. For example, see this logo. So this is the logo of SBI, State Bank of India. What is the use of this logo? Uneducated man also can recognize. He cannot read the bank name, no? By seeing the symbol, he will recognize that this is SBI. MRF Tire Company logo. So this is Syndicate Bank Company logo. These are the logos of other companies. Tata Company logo. Then Indian Tobacco Company logo. Godrej Company logo. Hindustan Unilever Limited Company logo. Bajaj Company logo. Infosys Company. Wipro Company. ICICI Bank. Maruti Company logo. HDFC Bank logo. Hero Company logo. Firm has the right to use these logos. Others should not copy these logos. Others should not use this logo. For example, you started one soft drink company and your company's name is Coca-Cola. So using this name is not correct. It is illegal. No permission will be given to you because your firm name is similar to one existing company, Coca-Cola. So their brand name, their logo we should not use. Thus, every firm to protect their logo, they take trademark on this logo. Means they only have the right to use this logo. That right is known as trademark. So it is an intellectual property. It is an intangible asset. Logo we can see, but the right to use this logo, you cannot see, no? That is why trademark is an intangible asset. Asset side we have to show this. Trademarks, 7,000 rupees. Next, bad debts, salaries, carriage outwards, printing and stationery, drawings, debtors. Debtor is an asset. Two adjustments are given. Therefore, amount in inner column. Adjustment number 4. Bad debts 500 and provision for bad and doubtful debt 5%. So these two we have to provide on debtors. Both are given in the adjustment now. Means both not yet deducted. Now we have to subtract these two. First you have to subtract bad debts. Only adjustment amount you have to subtract. In trial balance also bad debt amount is given 1,000 rupees. Don't subtract that amount. Bad debt in adjustment 500 rupees only we should deduct here. 12,000 minus provision for bad debt. We calculated in P&L account now. 600 rupees came. Remaining amount in outer column 11,400 rupees. Debtor completed. Discount, insurance, buildings, asset 6,000 rupees in inner column because depreciation adjustment is there. Depreciation we have to subtract. In profit and loss account we calculated 600 rupees. Remaining amount in outer column 5,400 rupees. Debit column completed. Come to credit column. Means here liability side. Capital at the end. Return, sales, dividend, discount, outstanding rent. If it is given in the adjustment 2 times, but it is given in the trial balance only 1 time. So outstanding rent, we have to pay rent. It is a liability. Therefore liability side you have to show. Outstanding rent 500 rupees. Creditors, liability 5,250. Trial balance amounts completed. Come to adjustments. Closing stock. 1 time trading account credit side. 2nd time balance sheet asset side. At the end we will show this. Outstanding stationery. We have to pay. It is a liability. Liability side 600 rupees. Depreciation on building completed. Bad debt adjustment completed. Prepaid wages 500. Next year wage now only we paid. So labor became liable to us. From labor we have to receive the work. Work should come. It is an asset. Asset side. Prepaid wages 500 rupees. Interest on drawings. This is related with capital adjustment. Now finally write down closing stock on asset side. Closing stock amount is given in the adjustments 2500 rupees. Come to liability side, capital adjustment. In credit column of trial balance, capital amount is given to 40,000 rupees in inner column. In profit and loss account, if our answer is net profit, we should add that amount to capital. But in present problem, net loss came. Net loss we have to subtract from capital. Minus net loss, 6,930 rupees. Remaining amount in inner column. Because drawings and interest on drawings adjustments are also there. From this, first you have to deduct drawings. Drawings amount is given in the trial balance 2000 rupees. Remaining amount in inner column because interest on drawings adjustment is also there. Now finally subtract interest on drawings. We calculated in P&L account 120 rupees came now. Remaining amount in outer column. So remember, to capital, if net profit comes, we should add. If interest on capital is given, we should add. And which amounts we should subtract? Net loss, drawings, interest on drawings. Everything we have taken in balance sheet. Finally, find out the totals of two sides. Liability side total is 37,300 rupees. Asset side total, same. Thus, in balance sheet, two sides you should get the same totals. Then only a problem is correct. So this is all about 8th problem from final accounts topic. Hope this video is helpful to you. Thank you.